Greed and bad decisions have created one of the most amazing investing opportunities of this generation. In this video, I discuss how bad financing structures and overzealous real estate operators have created an incredible buying opportunity. I'm attending 20 conferences a year minimum, networking with industry leaders, experts in market cycles, billion-dollar funds, folks that have thousands and thousands of apartment units. And I'm delivering you the water cooler talk from these interactions. This video is the behind the scenes information that we're talking to with the top brokers, insurance providers, mortgage lenders, and institutional investors in this country. Whether you're new to syndications or an investor that has many deals under your belt, I'm sure you will walk away with actionable insights. If you're newer, I will pause in this video and tell you where you can look for more information on some of the more complex matters that it's going to discuss. So first, the distress is happening now, which is creating incredible buying opportunities for buyers. It's not fully here because many buyers that bought multifamily 2-3 years ago just haven't accepted the reality that their multifamily properties are worth 20-30% less. However, sellers who can do math know that's the case. So what's happening is transactions aren't moving. People aren't selling, people aren't buying because there's a disconnect between buyers and sellers. In the industry, the inside lingo is called the bid-ask spread, meaning here's what we're asking, here's what people are bidding. And right now, that spread is still slightly elevated. Imagine your house payment or car loan or any loan that you have going up by 5% in 2 years. Imagine what that would do to your ability to afford your payments and the type of distress that could put on a family. But now imagine that happening on people that own 20, 50, $100 million properties, even billion-dollar properties. Imagine the type of distress that's happening because they took adjustable mortgages back at this time frame when rates were so low, right back in March of 2022 and months before that. Commercial real estate was the hottest thing since sliced bread because the cost of capital was almost free. Now, what happens when the cost of capital is so cheap? Buying properties is very easy and very profitable because your debt payment is so low. Now, when your debt payment jumps up by 5% and you have an adjustable mortgage that's coming due and you can't refinance, a lot of folks in today's market are not going to be able to afford their payment. And they're either going to have to sell their properties for very cheap or foreclose on those properties back to the bank. This is creating an amazing opportunity for investors that have liquidity now to come into the market and buy when the market is so low. Now, a question that people may ask is, well, what if rates continue to increase? What would happen to property values? If rates keep going up, I would bet all of my money that property values would further drop even more. But if you're trying to time the bottom of a market, you're going to miss out on an incredible opportunity. Market timing is one of the biggest mistakes investors make in any asset class, whether it's stocks, bonds, real estate. Nobody in the world can predict the exact bottom of a market or the peak of a market. It's really about understanding the fundamentals, if those fundamentals are strong, and if it makes sense to buy right now. The investing philosophy that we have at Aligned Ventures in today's market is the following. If a property is able to cash flow today and we're able to get fixed financing, and in commercial real estate, fixed financing is usually 5, 7, even 10 years. Now we have this long-term financing on a property at the current rates today, which is fine. But if the property is cash flowing, that means money is left over after all expenses every month. The investment has some security around it. So what's happening now is if you're able to acquire these properties now at today's financing environment and rates go back down in the future, which most people predict that they will, then you are able to then refinance that property and create that much more profitability. Now, in commercial real estate, the value of the property goes up, the more profit that's in there. So a lot of the industry experts and the pros are trying to acquire these properties now, make sure that they cash flow, have positive returns, and then when the market, the interest rate market in specific, gets healthier, to refinance those properties and essentially have those property values shoot up. Now, if you believe that rates are going to continue to increase, then maybe investing in real estate is not the best option for you. However, I will give you a little bit of context on why rates increased in the first place. During COVID, the government was printing money with stimulus checks. This gave people so much spending power that was artificially created. They didn't actually have to go and earn that money. And guess what happens when people don't have to work for something? They don't value it as much. So now people went on shopping sprees, buying all types of goods. And when that much money is pumped into the economy and all these goods are being purchased, well, the demand goes up. And when demand goes up, the supply becomes more expensive, which now caused massive inflation in the country. You could probably see that by looking at your grocery bill. On top of that, during COVID, the price to ship goods to the US went up by 3, 4, 5 times. So if the price to ship those products jumps up so much, think about the retailers in the US. They have to charge that much more for milk, eggs, anything that you buy as a consumer, because the price to ship it from China as one of the big exporters to the US has increased by so much. So this combined with all the money pumped into the economy created massive inflation. Now, when an economy goes into hyperinflation, this could cause complete anarchy. Imagine if you walked in one day and a price for a gallon of milk all of a sudden was $20, right? People aren't able to afford food, housing, and simple basic human needs. So in order to cool down this inflation, Jerome Powell, who is the head of the Fed, said, look, we have really one tool that we can use in order to get inflation down. And in order to get inflation down, we need to increase the interest rates. Now, the reason why that has an impact is because when interest rates go up, that means the cost of borrowing money is more expensive. And when the cost of borrowing money is more expensive, people start spending less. They stop indulging in buying all of these goods and products. And when people stop buying so many goods and products, the cost starts going back down because there's less demand. And when demand goes back down, then the supply side also becomes less expensive. And guess what? Everything that Jerome Powell did, it's working. He was able to bring down inflation from June of 2022, was at 9.1%. As of today, it's about 4.1%. This is the ultimate factor that the Fed is looking at when they decide whether to lower rates or increase rates. However, in real estate, there's a lag time. It's not like inflation gets a little better and they just start dropping rates on the banking side. However, this is the light at the end of the tunnel. People see that inflation is getting under control, and many experts predict that real estate interest rates are going to go down as well as all other interest rates. However, here's the caveat. The people that took all of these adjustable mortgages when money was almost free, it's too late for them. Rates aren't going to drop fast enough or hard enough for their property values to increase again, for them to actually be able to refinance into more stable financing. Myself and many of the top players in the industry believe this will be one of the greatest investing opportunities in real estate since the 2008 financial crisis. and more likely of this generation. Find out more about the pros and cons of investing today and the opportunities available today. Book a call with us in the link below, and don't let this opportunity pass you by.